I feel like a black Republican money I've got coming in. Can't turn my back on the hood, too much love for them. Can't clean my act up for good, too much thugging him. Probably in the back in the hood, I'm like fuck it though. Huddling over the stove, we were like brothers then. No, he was nothing other than the son of my mother's son. We had governing, who would have thought the world with him, like ice cold albums. All good things. Didn't figure the same thing that all hurt things. It was all good things. All good brains. Couldn't imagine all the disaster that one good brain could bring. Should blame the game. And I could. It's kill or be killed. How could I refrain from? Anyway. Yo, 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 yo. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall. And I'm just letting a few people roll in. I'm going to go grab me a bottle of water. I'll be right back with some healthy sunflower seeds as my snack. And we're going to get into this infinite banking concept. Sit tight. Yeah, that though. And always, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, if you'd like to support channel growth, the information is in the description. Schedule a one-on-one appointment with me. The information is in the description. To buy life insurance directly with an instant decision, the information is in the description. To get funding for your business up to $25,000 instantly, the information is in the description. Basically, if there's something you want, I got it. Click the link. I'll be right back, though. Sheet in the building. Salute, brother. All right. Let's see what else I can play in the background for us while I let us get ready here. I guess I'll go with my original that I tend to always play for us. All right. Yo, 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 yo. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, and I've returned today to hit y'all in the head with the infinite banking concept. So I've been speaking to a lot of brothers in the space and everything, and I've noticed that, you know, we got beefs and everything, but the purpose of this space for me was to come and share thoughts with other intelligent black men so we can go ahead and get everything done, right? One of those important aspects is obviously the socioeconomic standard, because socioeconomically, as black men, in terms of the totem pole, we are last. And I don't agree with that. And there's some content creators who say it's fun to be rich, but it ain't fun to be rich alone. So there's a couple of concepts in my field, especially with certain companies like Primerica, World Financial Group, People Helping People, FEG, all these BS companies that are MLMs, right? And I don't like MLMs at all, because all they do is make you recruit when you don't even know what you're doing. So a lot of them will talk about buy term, invest the difference. And they have poisoned a lot of people's mind to go with that concept. Now, don't get me wrong. Actually, even people like Dave Ramsey and Sue Zorman, big guns, right? Well, they know about the theory of stuff, but they don't know the actual practical application. So it sounds nice because they got a bunch of money, but what they do is they, behind the scenes, sit with a financial advisor. For example, one of the things they tell you is whole life insurance is terrible. I kind of agree with that, but there's more layers to those onions. Now, we'll get to that in a minute. But what I want to get to with y'all is BYOB. B. And it ain't bring your own bottle. It's be your own bank, right? This is what the wealthy tend to do. They become their own bank. Well, how do they do it, right? And then you'll hear a lot of BS people talking about, well, real estate has made the most millionaires, and the stock market made the most millionaires. And then you'll even have people in these bullshit companies like Primerica. Primerica made the most millionaires. No. Millionaires are made in different ways. Okay? But the wealthy millionaires are made by generational wealth, which is the passing of assets from one sector to the next. Like we've got these boomers about to die off and give what, $64 trillion over to the Gen Xers. The Gen Xers are just folks in their 50s. So it really ain't even that old, right? The oldest millennials are technically 40, maybe 41. So if you're born in 1980, you're a Gen Xer. Until about 1983, to be honest, is a Gen Xer. I believe it's 82. Is Gen Xers. 83 on are millennials. Till about 94 or 95. Then those are your zillennials. At any rate, now that I've been talking for a couple minutes, I want to address this buy term and invest the difference really briefly, because it's really important and you have to understand what it is you're getting into. So I started a blog. Make sure you go follow my Facebook, because I have the blog on there. And my first blog post was explaining the difference between whole life and term life, because there's huge differences. Again, there's more layers to peel back in these onions. So let's look at this. Buy term, invest the difference. What the hell does that even mean? It sounds nice when your Primerica agent comes and says, don't get whole life, buy term, invest the difference. It sounds nice when Dave Ramsey says, don't get whole life, buy term, invest the difference. So, first of all, what the hell does that mean? Well, that means that you're supposed to buy a term insurance and invest the rest into some form of an investment of equal risk. The problem is this. What is your budget for that buying of term or investing? So what is your budget for investing? If you don't have a proper CSI, coverage savings investment, you shouldn't be investing because you don't have your systemic savings. I sit down with people all the time. I got money in investments. How much are you saving a month? I don't save systemically anything. So then how are you buying term and investing the rest? Invest the rest of what? What is the budget that you've come to this financial advisor for? Hey, financial guy, I want to buy term and invest the rest. Cool. What the fuck is the rest? Because what are you buying term? If you come to me and say, hey, Alonzo, my budget is $100 a month. I want to buy some term life insurance and I want to invest the rest. I'm going to say, okay, let's see what kind of term insurance you could get for $20 a month. Well, that'll get you a $50,000 policy. Again, these are arbitrary numbers because you really don't pay for life insurance with money. You pay for life insurance with your health and your age. Prime example, the Michael Jordan Cool Gray 11s came out, which is like the 15th fucking time the Space Jam Jordans have come out. But niggas always want to say, I already have one life insurance policy, but these Cool Grays, my nigga, these ones are absolutely different. You see, there's this little one piece of stitch on the very fucking bottom of the Jordan. And last time when they released it in 2015, it went left. This time it goes diagonally left. So I got to get these fucking $300 pair of Jordans. But nah, I don't need multiple life insurance policies like the wealthy do. Besides, my Primerica guy told me to buy term and invest the rest. Sassire, I guess it's Sassire. If you're interested in doing insurance and financial services, I'm going to tell you like my man Art Nostal. I don't know if you follow a lot of the men in the black manosphere, quote unquote. As I say, if you're a black man on YouTube in front of a camera, the rest of the world, the billions of people who consume it, see you as black manosphere. It's just like in America, if you have the skin tone I have, no matter what mass of land you're from, guess what they see you as in this country of America? They see you as black. It is what it is. There's no getting around it. It's just the perception, right? So if you're interested, I'm gonna tell you, like he said, man, you need to come to death row, and I'm death row. You don't want the Primericans taking all your clients, giving you 25% commission until you recruit 2 people to get raised up to 50%, talking about they make the most millionaires because they have RVPs and get BMWs. All that shit is from recruitment money. It ain't from actually selling financial services. Ask how many of them motherfuckers been invited to the MDRT, $1 Million Round Table. It's an industry award of the top 1% of financial services representatives in 75 countries. They'll tell you, we're not interested in that. Well, that's just like Will Smith wasn't interested in the Oscars when he and Jada Pinkett, Smith, said, Oscars so white. They boycotted the Oscars because they wanted one. So buy a term, invest the rest. You need to know what you're investing. Then you need to know, well, what is the equal risk to this life insurance? You also want to look at the fact that that life plan is generally the most common term policy is a 20-year term. Now, if you're 49 years or old or under, you can actually get a 30-year term, which is the most economical. See, the way term life insurance works is once your term is up, like the president, his 8 years is up, he's out. So once your term is up, you no longer have life insurance. You get none of the money from your life insurance back, and now you're X amount of years older. So buy term, invest the rest is literally saying, I plan on dying in 19 years. So if you're 20 years old, you come to your financial advisor and say, I want to buy term, invest the rest, give me a 20-year term policy. You're literally saying, I want to die at 49. That's my financial plan. And I want all these investments to come to fruition before 49 so I can enjoy them. That's kind of a dumbass plan when you look at it in that way. But it sounds cool. Buy term, invest the rest. You won't even find an investment that's equal in risk if these so-called fly-by-night advisors even do a risk assessment with you. Now, what I'm going to go ahead and do is read this brief article because this is about the infinite banking concept. So infinite banking is generally how you want to actually do buy term and invest the rest, but they're 2 separate concepts and they're split separately. But if you're an all-star advisor like myself, you're going to try and get people to do both. Now, let's take a look at this concept of infinite banking. So as you can see here, this is the infinite banking concept, aka become your own banker. And this is from an actuary. What is an actuary? An actuary does not sell life insurance. Okay, again, an actuary does not sell life insurance. An actuary is the person who's part of the reason behind you getting your life insurance price, whatever that price may be. Well, why is that? Because the actuaries are what we in the insurance world call the bean counters. Those are the people who actually come up with your schedules or your rates of mortality. So these people are people who count, okay, a 37-year-old black male who's 5'8" and 150 pounds and smokes tobacco has this likelihood of dying very soon, within the next 12 months. So because of that, his life insurance is going to cost X amount of dollars. So hopefully that makes sense to you. So now let's look here. Advisors sometimes call LLIS and this is their company, because their clients have been approached by an insurance salesperson pitching a concept called infinite banking, aka be your own banker. And a lot of advisors who don't know how this concept works want to know, what is it? Is it any good? And should my client consider doing this? Now, I'll show you guys later actually how to apply the infinite banking concept, but I'm just going to take a look at a little bit of this article, and then I'm going to go over some other things, right? So what follows is a response written to an advisor about a real proposal that the client was given. First, 2 background points must be made. 1, this is a sales concept, not an insurance policy. This concept is usually illustrated with whole life policies, which is why infinite banking is a fucking terrible concept with whole life policies. And more recently with index universal life policies. Now that's a great concept with IULs. The policies require large insurance face amounts and large premiums. The policyholder would buy the policy, be required to sock away large amounts of money every year, and wait for the cash values to grow to use them like a bank checking account. Now, most people had no fucking clue that you can use your life insurance like a bank account. You can actually borrow against your life insurance, permanent or term. Once you have a life insurance policy, it adds to your net worth. You don't think Jay-Z can just go to the bank and withdraw $1 billion, right? No. A lot of those assets are things like his life insurance, which he happens to carry with New York Life. The agent and sales literature will tell their prospect that this is an investment. And no, they shouldn't call it an investment. They should call it an alternative investment or an alternative investment option, because they can earn interest tax deferred on the cash values, and they can borrow money from the policy and pay themselves back interest on the loan instead of paying back the big bad banks. The problem with this investment is that there are usually little to no cash surrender value in the first several years because of surrender charges. Now, again, this is because an agent doesn't know how to properly set it up. It's many years before there are real accessible cash values, and in the interim, the policies require continued large premiums without flexibility. So the prospect is a male, Mr. C, age 37, non-smoker with preferred health. So again, remember, I told you that insurance is not purchased by your money. It's purchased by your health and your age, right? So if you're unhealthy and you're old, then, it will be different. Hi, Malika. You're never late. You're always on time. It's perfect timing whenever you get in here, right? So I'm also pulling up my illustration software so I can actually break this down for you, right? And I'm going to create an illustration just like they're saying. So a 37-year-old non-smoker with preferred health. So his whole face amount is a $10 million policy. Remember, whole life insurance means the premiums must be paid for the whole life of the policy. And the advisor said the client really needed $2 million of 20-year term, not a $10 million death benefit. Now that depends, because there's a lot that goes into that. Okay, now, if we're looking at, hold on, let me log into my software here. I should pull this up on WinFlex too. I may do that too, just for the heck of it. Bear with me, y'all. I'm logging into my software so that I can do an illustration for y'all. But, so what it says is that whole life means that the premiums must be paid for the whole life of the policy. So here's again where you have people who, and these are quote unquote experts. Unfortunately, they don't quite know what the fuck they're talking about. Why do I say that? Because you can have a whole life policy that you don't pay for the entirety of the policy or the life of the policy. You can have a whole life policy that you pay similar to a term. Now, what do I mean when I say that? Well, you can have a whole life policy. I'll give you an example. There's a brother in this space, and actually, he told me I can actually speak his name by the name of Marty McFly. Now, it's a bunch of brothers in these spaces. Y'all all got y'all beefs. Like I said, I really don't care about that. Whoever you beefing with, you beefing with. It is what it is. When in the interim of y'all beefing, before y'all take each other out, make sure y'all come see me and get y'all insurance and shit right. I'm licensed currently in 10 states. The only reason the NIPR isn't showing my license in Florida because I haven't mailed them back my fingerprints, and they won't accept my national fingerprints because Florida is a suck-ass state. At any rate, Marty McFly's policy is a index universal life policy that I have set up for him. And initially he got a whole life policy from New York Life. Well, what happened? He came to me and he was paying $1,300 a month with New York Life. So number one, what I did was I saved him $300 a month immediately and took his premium from $1,300 a month to $1,000 a month. Now, working on commission, you'd say, well, Alonzo, that's kind of stupid if you get 50% of what he pays for the year. FYI, your insurance agents, if they're with a major company like New York Life, MetLife, or they're a broker like myself, generally they're going to get 50% to 90% of what you pay for the year. So if you pay $100 a month, that's $1,200 a year, right? They're going to get $50 a month off of you, right? That's it. Or $600 for the year. That's it. So it's not like they're making a boatload of money. So you're like, well, Alonzo, why would you cut yourself? Let's see, 300 times 12. That's another, what, $1,500, whatever it was that was supposed to be my commission. Why would you chop, that many $1,000 off of your commission? Well, here's a couple of reasons why. One, just like Sheed is one of my clients. Why would I cut myself off in the face of commission? Because just like with Sheed, right? I cut myself off in commission, and you know what Sheed did? Sheed made me 10 times as much money. Why? Because Sheed speaks about what I've done for him. And Sheed will go out there and tell you, hey, my two sons are clients. I'm a client of Alonzo's. I got my two sons' policies with him. Now, what does that do for me? That makes a whole lot more money because people will be like, hold up, I know Sheed. He's not BS. He trusts this dude. You know what? Let me actually have a conversation with this dude. But anyway, so these experts don't quite know exactly what they're talking about because, like I said, with Marty McFly's policy, instead of paying in perpetuity, because that's not what he wanted his policy to do. So one of the things when you sit with a financial professional, if it's me or not, ask them, hey, here's what I'd like. First, tell them, hey, I have this idea. I want to do ABC, XYZ. Is that something that life insurance can do for me? Because most of the time, agents are just going to be like, hey, here's a $50,000 policy. See you later. But they don't tell you what your policy can do for you. I sat down with a young man the other day, and he was like, look, I only want to spend $60, but I want a whole life policy. I was like, okay, but at your age, it's not going to do anything for you. Do you know what, your insurance can do for you? He's like, yeah, if I die, I want to leave, some money for my family, my mom and stuff. I was like, okay, then you should get a term policy, bro, because it's real cheap. It won't be the whole $60. If it is the whole $60, you're young enough that you'll leave millions for people. But anyway, so with Marty McFly's policy, at $1,000 a month, it's an index universal life policy, so it's building compound interest. Now, he got it before November of 2021, so IRC 7702 didn't kick in, so he's getting 6% monthly compound interest on that $1,000 a month. So what does that mean? For every $1,000 a month he puts in, he's getting $60 of growth a month on that $1,000 through that life insurance, right? So $60 a month doesn't seem like much until you compound it and you realize that, wow, this interest is monthly. Indeed. And Sheet, I still gotta holler at you. I do have a contract with Lincoln if you're looking to probably put the business with Lincoln. The reason I use Emeritus the most is because it has a lot of ease with which to do things. In your situation, though, I will probably, actually, the link is in the description. When we get together, bro, I gotta really, because I can get you that number that you want. And it's important that you understand, and this is not just specifically for Sheed, this is for everyone listening, that your financial advisor works for you. So what we do is we gather information so that we know your situation. When we know your situation, we make recommendations. We might make one recommendation, we might make 5 recommendations, but then it's on you to say, pull the trigger on this or don't pull the trigger on that. So that's the way that it's done. But so Marty McFly's policy pays at $1,000 a month. So I saved him $300 a month off rip, right? And then it's actually ballooning cash value faster than his policy at New York Life, because his policy at New York Life was a whole life insurance, but it was a traditional whole life insurance. 100 watts, what it do, bro? So it's a traditional whole life insurance. With a traditional whole life, you don't get as many bells and whistles. In fact, now that I know that there's folks in these spaces, my man, Everything Every Day with D. Durrell was showing off his E-Class, doing big things. And I actually am going to show y'all, now that I know that brothers actually do this shit, I'm going to show y'all how the difference between life insurance and shopping for Benzes. And now that I know that there's brothers who actually understand how to go to a dealership and shop for a Benz, because my man got a 19 E-Class, and trust me, that's a brand new fucking car, right? You don't really want to buy the 21 or the 22 unless you're Kim Kardashian in them, right? Because they've got the disposable, unless you're doing a lease. But if you're financing or purchasing the car, yeah, you want it to be a couple of years older. Now, you do want it to be new enough because of the car insurance. I also have my car insurance license, so I'll let y'all know about that too. No doubt, brother. I'm going to definitely keep dropping them gems. But, so this $1,000 a month that he's paying in this index universal life insurance, he's getting $60 a month off of. Now, the New York life insurance policy with New York Life, which I'm not going to shit on. Actually, I am going to shit on that company because I shit on Primerica too. I'm going to put it to y'all like this, to be honest, because I'm the all-star advisor. I'm a broker, right? So I keep it all the way 1,000. The company really don't matter. It's about the agent and if they know what the fuck they're doing, right? So I shit on Primerica because 9.5 times out of 10, the agent has no fucking clue what they're doing because they haven't been taught, right? And so all they have is the buy term invest the difference principle, but they don't understand how the fuck to do what it is that they need to do to actually, like, and they sell shitty mutual funds. But anyway, so he wanted this policy for only 10 years, right? But they put him in a shitty regular whole life that was growing at, I think regular New York Life's grows at a 3%. It might be a 4% interest rate, but most regular whole life grows at a 2% compound interest rate monthly. And it's not attached to the S&P 500. So when you're dealing with an IUL, Index Universal Life, generally they're going to be attached to an index. So my index is, the most common index is going to be the S&P 500. Now, usually you're going to get a 1-year point-to-point. Snuggles in the building. You hear that, though? So usually you're going to get a 1-year point-to-point. And what point-to-point means, and you should understand this for all investment. FYI, if you want to do investments, I can do investments too. I'm tired of hearing all these bullshit crypto and fake-ass investment niggas. When you're talking investments, a real investment advisor ain't going to talk investments online. They're going to say you got to schedule an appointment. We'll talk insurance till we're dead. But investments is something very specific. You could get sued. I've been sued once in my life. I got sued for $1 million, and she won out of court 41%, $410,000. Luckily, I had insurance for that. So all I paid out of my pocket was $5,000. Right? But there's a boatload of different insurance. He said I had to pull my pen and pad out. So many terms I need to look up. Thank you. No doubt, bro. Listen, there's so much more. But let me go back into this BYOB. Be your own bank. So it says Mr. C was told that he should funnel all the money he could. Oh yeah, before I finish that, let me finish the Marty McFly thing. So he's paying $1,000 a month into this policy, right? And with that policy, he's gonna pay it for only 10 years. So he's paying $1,000 a month for 10 years. At the end of that 10 years, he stops paying for the life insurance. But guess what? It's not a term insurance policy, so it keeps going. He still has the life insurance coverage. And it's like protein, because the shit keeps growing. But he's not putting more money into it. Right? So just like buying them cool grays, right? Because cats will say, well, why wouldn't I buy it when I'm young? Why won't I just wait till I'm in my 40s and 50s to buy it? Because if I bought them cool grays today and said, look, bro, I know you ain't got enough money today, or you ain't ready today to buy these cool grays, but I'm going to buy them. I'm going to hold on to them for you. You can be like, all right, cool. Oh, but I ain't tell you, while I'm holding on to them for you, I'm going to wear them every fucking day. Then 10 years from now, when you come back, yo, Zoe, I need them cool grays that you held for me 10 years ago. I know they worth something now. Oh, yeah, I got them for you. And they fresh in the box with the paper. And then when I open them, you're like, yo, what the fuck is this? It look like you wore them every day. And be like, well, yeah, that's just like you waiting for life insurance, right? You're never as healthy as you are today. So remember this thing here, right? Like I showed you, it showed him, it said preferred health. So what does preferred health mean? Well, that basically means you fucking Superman. You ain't never been to the doctor. You ain't never had a clogged nose. You definitely ain't had the Rona. Right? Most people are going to be standard health. Regular degular. You ain't going to have this crazy shit. You know what I'm saying? But yeah, man, when I seen, I got to speak on what I see, man. My man D. Durrell stunning on niggas right quick with the E-Class. Yeah, I ain't even going to hold you. I seen that this morning. And Chaotic, I'll be on your shit probably later this evening, man. You know I go everywhere. So, Mr. C was told that he should funnel all the money he could into a participating whole life policy. So now we have to understand what is a participating policy, right? So a participating and this, I'm glad you just typed that, because like I said, it's a lot of the policies are going to be on the S&P 500. Ironically enough, and this is why Lincoln Financial Group is a crazy good company, they have, so their index universal life is a little different. Their IUL is what's called a hybrid life insurance policy. Now, I had someone ask me what a hybrid was in the past, and I didn't quite know. Luckily, that's why I'm the all-star advisor, because I keep training. I'm like Jordan. I stay on my craft. I'm like LeBron. I'm like Kobe, right? That Mamba mentality. I'm going to figure out the ins and outs, the ups and downs, the lefts and rights, right? So a hybrid insurance policy is what a lot of people are doing now, which is why, a lot of companies are doing now, which is why, unfortunately, a lot of your Primerica agents are going to get fucked because they only have their life insurance license. They don't have their life and health insurance license. So the hybrid insurance is a long-term care attached to a life insurance, right? That's what the hybrid is, and that's what Lincoln Financial is big on. But they also had Fidelity. Fidelity created an entire index solely so they could have an index for Lincoln Financial Group to have based on their index universal life insurance policy based off of. What the fuck? They created an entire fucking index for this one life insurance company. So that's lit, right? Indeed, man, that's what we do. Cheers in the air. So, Mr. C is they told him to stuff all his money in a participating policy. So what is a participating policy? Well, there's a few companies that have participating policies. I can tell you ones that don't. World Financial Group, aka Transamerica. PHP, no. Right? And a lot of these companies a lot of these agents from those companies get 200% commission. Right? So you pay $100 a month, they get $200 a month off of it. That's why they sling these bullshit term policies to you. Right? It's a money grab, man. If y'all knew the real ins and outs of this shit, man, listen. I make drug dealer money, cuz I make $6,000 off of one deal. Real shit. You know what I'm saying? But then I'd be 3 months behind on shit too. That's the problem with commission. I'm like a drug dealer, right? But participating policy means that it pays dividends. Did you know life insurance paid dividends? Let me explain to you. Life insurance companies have been paying dividends and attached to the S&P 500 for over 120 years. Life insurance companies have been paying dividends through the Great Depression. Yes, the 1920s Great Depression. The first stock market crash when motherfuckers were jumping out the window and started world wars. They were also paying dividends through the Great Recession. Motherfuckers was going crazy over Barack Obama. They were also paying dividends. Yes, paying dividends since when? Through the Trump administration and everything. Life insurance companies pay dividends as long as your policy is participating. So New York Life is a company that has participating policies. Lincoln Financial Group is a company that has participating policies. MetLife / Bright House Financial is a company that has participating policies. Emeritus is a company that has participating policies. Mass Mutual is a company that has participating policies. State Farm is a company that has participating policies. Now, you have to be very careful when you buy your life insurance from a car insurance company. Now, I used to own an Allstate insurance company in East New York, Brooklyn. That company failed. I had to close the doors. Shit happens. But when it comes to property and casualty, believe it or not, State Farm actually got some good products. You can also get credit cards, bank accounts, and a fucking mortgage from State Farm. You can also do investments with State Farm. You can also do a regular CD with State Farm. And no, I don't represent State Farm. I personally hate the fuck out of that company. But I'm a broker, so I'm generally going to give you an impartial outlook, because at the end of the day, I've learned in business, I ain't for everybody, everybody ain't for me. But the information is, and if I can share that information and make an impact, there we go. One last thing, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. You can support, you can schedule a one-on-one appointment, and you can purchase life insurance directly up to $1 million with an instant decision and no medical exam. The links are in the description. So, it says Mr. C was told that he should funnel all the money he could into a participating whole life policy. Remember, participating meaning it pays dividends. And then he could use that policy as his own private bank. Our analysis of the biggest concerns about his plans are: agents pitch the concept because the products have high commissions and large premiums. The advisor asked us to help him sort through this type or give him our opinion. Now, here's the problem. They do have high commissions, but to be honest, I'd get a higher commission out of not structuring a be your own bank. You see, they have something called target premium. Target premium is what the agent gets paid off. So the target is based upon you, your age, etc. I'll give you an example. Again, the link's in the description. So an example of a target premium, I had a client who in 2013, she bought a house in Brooklyn for $542,000. So I pulled out what's called an amortization schedule. And I'm going to start typing some of this stuff in the chat too. In fact, let me do that. So we've got amortization schedule. Let me make sure I spell this correct for y'all. Amortization schedule. AMORTIZA. Isn't that how it's spelled? Right? AMOR. Okay. How do I spell it? Schedule. Okay, so what I dropped for her was something called an amortization schedule, right? So basically, that's a payment schedule. If you've ever purchased a car or a house, you should get an amortization schedule. That amortization schedule is the exact same thing as a cash value life insurance illustration. So she was paying $1,800 a month in her life insurance policy. However, I got paid off of the target. The target premium was like $600 a month. The other $1,200 a month went straight to her cash value. So when people talk about, well, hey, be worried about the commission, first of all, they're telling you that, especially like investment advisors, oh, be careful because these insurance guys get huge commissions. It's because they don't want to tell you that their money management fees come out of your investments and it averages to $10,000 a year or $834.33 a month, right? How do I know? Because I just did an annuity for a client of $10,000, which is basically $835 a month. And I'm an advisor, so I actually does this. But we get paid the target. So even though they are larger premiums, the company benefits from that, not the agent. Okay? So what happens in a situation where, for example, with Marty McFly's policy, his target premium was not $12,000. His target premium was like $7,500. So I got paid 50% of the $7,500, not 50% of the $12,000. You see? So don't always be worried about what the agent gets paid, number one. Number two, you ain't worried about what the McDonald's CEO gets paid when you pay for your fucking burger. So don't worry about what the nigga, or you don't worry about what that Benz dealership guy is getting paid when you buy your Benz. And you realize that a lot of the taxes that they put and service fees that they put are their commissions. I used to sell cars. The way they beat you in the head is with the taxes. That's my motherfucking commission. Car salesmen only get $200 to $250 a week. And then the rest of their money is made in the taxes that they put on your purchase of your vehicle. So, the advisor asked for all that. Now, one is performance risk. Even if the idea was sound, what financial advisor would ever recommend that his client put all their savings into just one investment? Why would anyone want to put their investment dollars through the high commissions and other loads of life insurance, especially whole life or indexed? The bank comparison. We don't agree that a whole life policy can be compared with a bank. But let's take a closer look. When you put money in the bank, you expect it to actually make it to the vault. Would you want the banker to put 50 to 100% of your first deposit directly in his own pocket? No? Well, that's exactly what happens with any whole life policy. To find out how much the banker keeps, just compare the first year's surrender value to the amount of premiums paid. The surrender value will be much less than the premiums paid, and it takes years for the cash value to equal the premiums paid. The cash. So where did the money go? To commissions, taxes, and policy administrative fees. Not all the difference between the premium paid and the cash surrender value goes to the agent's commissions. Insurance companies must pay state premium and tax, federal DAC tax, which average 2.5 to 3% on every premium dollar paid. This tax is paid in addition to what the banker or the insurance agent keeps the first year and receives on all renewal years. Now, I haven't talked to y'all about renewals, but if anybody is listening and is interested in getting into the business, renewals are what companies like Primerica, Family First Life, Transamerica, People Helping People, all them FEG, all them bullshit companies who be like, we can give you 200% commission. They don't tell you about renewals. What a renewal is you continue to get paid as long as the policy is in force. So even though you sold it last year, next year you get paid off of it if the policy is in force. Now you don't get 50%. You might get maybe 4%. So they paid $1,000, you get $40. Hey, $40 beats a blank. All right. Now, let's look at the rest of this. Policyholders by law have some regulatory protections because of the restrictions placed on how insurance companies can invest cash values. As most people know, bonds are the favorite investment for most insurance companies. From the net after investment expense yield, the companies then charge between 1 and 1.5% on the spread between earnings and expenses as profit before crediting interest rates of a return on a policyholder's cash values. With a whole life insurance, the death benefit must be large enough to support the large premiums of this plan so the policy doesn't become a mech. Now, if anybody's listened to me for any length of time, you always hear me talking about modified endowment contracts because I'm always talking about how Donald Trump paid $750 in taxes. A mech policy would no longer be considered life insurance and will lose its tax advantages. The face amounts of life insurance are not driven by the need for life insurance, but on the amount of premium. This concept forces clients to buy more insurance than they really need. Now, that, again, is not true. This is somebody who doesn't know how the fuck to do what the fuck needs to be done. And yeah, I'm cursing, but it is what it is. What's going on, Sunclaw? I'm breaking down some facts. You know, like we were showing the Bowley concept where I showed you the banks put $22.6 billion into the stock market, but $3 billion into the, $22.6 billion into cash value life insurance, but only $3 billion into the stock market. Now, yes, a lot of that is to fund employee benefits, but that's something called COLI, corporate-owned life insurance. BOLI, bank-owned life insurance, is an investment. You can actually go to a website called, and I'll put it in here, BOLICOLI.com. Go check that. Actually, let me see if I can do it like this. I think it's BOLI. It might be Coley Bowley. I haven't been there in a while. Right? But that's bank-owned life insurance, corporate-owned life insurance.com. So it says insurance companies won't let applicants buy just any amount of life insurance they want. Yeah, you can't just be like, hey, I make $5,000 a year. Give me $10 bazillion of life insurance. Right? That's the reason why when people be like, well, how much is life insurance? It depends. Right? I'm not going to go through this entire thing. What I'm going to do is actually do an illustration because I don't like these. This is my first time reading this shit, and these motherfuckers don't know what the fuck they doing in terms of, you know, because they're talking about VULs. They're confusing the fuck out of people, right? And this insurance shit really is confusing, especially if you don't know what the fuck you're doing. So here's what I'm going to do. I'm going to stop sharing this screen real quick. I'm going to close this down. I'm going to come to StreamYard. I'm going to stream my whole screen, right? Well, I'm going to stream my whole screen. So I can go back and forth, right? So we about to create a new client, right? And with this new client, right, since he's Mr. C, right? Because that was the client on the what's the name was Mr. C, right? So let's create Mr. C. Create new client. Mr. Last name C. And they say he was 37, right? 37. And let's put him in New York. Alright? So now let's go. Okay. And say he was born December 7th, 1984. All right, we're going to create a standard illustration. Now, with this, first, we're going to look at buying term and investing the difference. I don't know how large this screen is for y'all, but oh, damn, that's going to probably be difficult. So, all right. Let me just do this and make sure, yeah, that's the only one up there. All right, cool. So, as you see here, most of the time you ain't going to see this type of stuff. Because, in fact, hold on. Let me see if I can pull up WinFlex while I'm at it real quick. Log in. Forgot your password. I had to change my damn password. Alright. Let me check my other email right fast. Bam. Alright. So while I'm at it though, Mike, what's going on, brother? Adrian. Wagwan, folk. Bear with me 1 second. My email is going fairly slow. I'm trying to load up a couple of things because this infinite banking concept, man, it is really frustrating when, people try to, I don't know, they be like buy term investor rest, which sounds nice, but investor rest in what? And then, I don't know, they just don't make no sense, man, the way a lot of these fraudsters is fraud, and you know what I'm saying, it's just it's frustrating. CG Wealth. Alright. Save and continue. Nobody does it better than me. Okay. Now, yes, there is some financial planning software. So this is one, and this is another. This is WinFlex. So as you'll see, hey, Alonzo Hall, that's me right there. What's my total WinFlex runs? Everything is averaging. So these are some of the carriers, Nationwide, Prudential, Security Mutual, and AXA Equitable that I use, as well as one of my favorite, which is Emeritus. I also use Lincoln Financial and Mass Mutual, but a bunch of companies have their own software in which you can use. So I tend to use this because it's quick and easy, but we can create another one. Let's they changed it. Illustrations. The fuck? WinFlex bugging. Start a new case. Let's do it with Prudential. I don't want to do the VUL. Let's do the term essential 30. Create client. Come on. So there we go. Mr. C. It's going to be 12/7. 12/07/1984. This is the same. Now, if you'll notice here, it says preferred best, right? Remember what I told y'all about that health. So remember, preferred plus, preferred non-tobacco, right? So this makes a difference. So let's give him preferred plus, right? And in fact, we're going to do this in a term policy. So he's going to be preferred plus, but we're going to show you a value plus term. Because, like I said, all life insurance ain't created equal. I'm going to make it cute, Adrian. I'm going to make it cute. So, now, remember, you got 1-year term, 10-year term, 15-year term, 20-year term, 30-year term, right? So let's see real quick what a 1-year term would look like. Let's see if we put in let's do $1 million, right? So $1 million for a 1-year term. If I preview that, and let's do it here as well. We're going to do preferred best. Boom, boom. $1 million. We're going to look at an annual. Calculate. Did it calculate over here? Preview. Why did this preview? So this is, again, this dude is with perfect health. So to be $370 a year for $1 million term for 1 year, right? But again, they tell you buy term and invest the rest. Well, yeah, let's give you the cheapest, most cheapity cheap advertised price for $1 million. $370 for that first year, right? Because that's age 37. But then that second year, the price went up. It's $500 for the year for the same coverage. But then the next year it's $550 for the same coverage. And for the next year it's $600 for the same coverage. Then the next year it's $670 for the same coverage. Then damn, the following year is $6,900 for the same $1 million worth of coverage. Waka flocka. Let's check over here, right? So for this, from Prudential, $1 million for a term, and this is their 30-year term. So this is going to be the same price for 30 years. So $1,195, but this is going to carry him till age 67. Now let's look here. At age 67, it'd be $41,000 a year for that policy from Emeritus. But again, that's a 1-year term. So when people say buy term, invest the rest, you have to, are you buying small fries or large fries from McDonald's? You don't just go to the fucking McDonald's and say, I want some fries. Then they're going to say, would you like a small fry? Would you like the kid size fry? Would you like the value menu fry? Would you like a large fry? Would you like a medium fry? It's not as fucking simple as you think it is, right? So when somebody says, hey, you have life insurance. I sell life insurance. You say, I already have life insurance. Do you have one pair of footwear? No. If you got one pair of shoes, you got sneakers and shit too, right? Because I had some fucking smart ass who wanted to say that shit to me. I said, you got more than one pair of shoes? Nah, I only got one pair of shoes. Oh, okay, well, I got a bunch of sneakers. You fucking asshole, ignorant nigger. And I'm going to call him a nigger with the ER because that's what he was acting like. Well, guess what? You don't wear the cool gray J's to play ballin', but you got a different pair of footwear to play ballin'. Since we won't be fucking arrogant and say dumb shit, I'm going to give you a dumb response. Nigga. Right? But that's the reality. Why the fuck is my screen so large? What the fuck? But again, this is a 1-year term for Mr. C. Now, again, comparing in prices, right? Because again, this is Prudential. So this is another reputable company that people are familiar with, right? So it's $11.95 for the 30-year premium. Let me take a look at some of these questions here. She said, why does the premium skyrocket like that? Because the risk every year. So because it's so risky and you're not doing another what's called assessment, right? They're not checking your health out or anything. You just go through and it just straight basically, because they're not taking the risk or assessing the risk any further, they're just going based on your life and letting you keep the policy. You got to pay for that. So now let's look at a 10-year term. Well, let's compare apples to apples. Let's do a 30-year term with them versus a 30-year term with Prudential and preview it. Now remember, This is the Prudential 30-year term. $1,195 a year until this guy, Mr. C, turns age 67. Same policy. $1 million a year. $1 million face amount. $1,020. So if you're looking and you're shopping for price, then that's why you shop for price with a term insurance. Because term insurance, if you're solely looking for price and you're solely looking for death benefit, then that's why you buy a term. If all you want is to leave somebody a big ass check when you die, that's why you buy a term. Now, let's go ahead and look at the buy term, invest the rest concept, right? Because it's supposed to be a concept that people like to use, right? So if we're buying term and investing the rest, and you're looking for a large face amount policy, so we're going to say that your budget is, basically this is $100 a month, right? So let's say your budget is $200 a month. So at $100 a month, or a little less than $100 a month, basically spending $1,000 on your life insurance a year, the other $100 should go to an investment. I'm sorry, this was a 10-year term. I thought I did 30. Let me see something. Oh, I see what happened. Why do we have the illustration software open twice? What the fuck happened? Yeah, this is a 30-year term, right? Yeah, this is a 30-year term. So, but as you'll see here, after 10 years, the price skyrockets again, because you can keep the policy and the same face amount, but you're not going through any additional underwriting. So since there's no additional risk assessment, boom, they're going to stop you there. Now, let's look at being your own bank. And generally what they're looking at is they're looking at a whole life policy. Now, again, not all whole life is built the same. Because if you'll see here, I have multiple types of whole life. I have value plus whole life. I have access whole life. And I have growth whole life. But they're all whole life. But again, it's just like when you go to McDonald's and you say, I want some French fries. Right? Do you want the Happy Meal size French fries? You want the value French fries? You want the small fries? You want the large fries? What fries do you want? Well, when you figure that out, you figure out the type of whole life policy. See, Sue Zorman and them, they're going to tell you, they're most of the likely, they're going with a value plus. Now, not every company is going to call it the same thing, right? This is just what Emeritus calls it, value plus, because it's their cheapest whole life. I could go back, for example, with Prudential. Why is my fucking... Go back to the product, please. Okay. This doesn't want to... Alright, we're just going to go back to Mr. C. And we're going to change the product here. I know, damn it. Here we go. Insured. Boom, boom, boom. 0 errors. Ah, here we go. So, for example, see, these are some of the ULs, and then companies will eliminate certain types of policies after certain periods of time. So, let's look at, and they have IUS, they don't have a, well, Prudential doesn't even have a regular cash value life. Prudential only has indexed and ULs. So we'll look at, and they have a VUL. So I can't use Prudential for this. Just change the company. Alright, actually no, we're gonna stick with Prudential and we're gonna do the UL. Damn, they got rid of all their regular, damn. Well, I don't use Prudential that much. We're going to look at their 2021 IUL. Yeah. Fix all errors. There we go. So, close that out. Yeah, she said all of this makes my... Listen, you know how I feel about it. So she says all of this makes my head spin. That's all good there. So I'm gonna go ahead and close this out and close this illustration out because I don't want to have too many illustrations open. Now again, also these are for Preferred Plus, so these are prices again based on the fact that you have the health of Superman, not based on the fact that you have regular human health and you've probably been to the doctor. Most of the time, I quote people standard, right? Non-tobacco or tobacco, because I want you to get the most close to what it's actually going to be. So where's my illustration? Here's my illustration software. So now they're looking at a value plus. Again, we're going to do $1 million face amount. And then we're going to do, well, I'm not going to do it with Prudential because they don't have a regular whole life. But this is a regular whole life. Now, this regular whole life $1 million policy is $11,000 a month. Now, that'd be a great payday for me. But as an agent and a fiduciary, it might not be the best for your situation. Also, as you can see, it doesn't build great cash value. But what did I tell you? First of all, and this is why you don't want a whole life, because whole life generally just has a surrender and a cash value, but they don't show you their surrender value. So let's look here, right? Your cash outlay is $11,305 in the first year. First year you get no dividend, right? And your cash value is low. You don't really have cash value accumulated till year 3 of the policy, where you got $5,000, but you're already, almost $30,000 in. And then by the end of 10 years, you've pumped in $113,000, but you only have liquid to borrow against $79,000. Not totally attractive. Now, let's look at this versus universal and indexed universal, which is still whole life. So again, when motherfuckers be like, whole life insurance is bad, it's because they don't know what the fuck they doing, right? So again, now we're going to look at an indexed universal, right? Now, first, like I was telling y'all, there's something called the percent of target. So we're going to go percent of target, which is going to be very different than having it set up to be beneficial for you, the client. So this is what Dave Ramsey and Sue Zorman do. They do percent they do target premium, right? So target premium. So for premium. Yeah. Okay, so we're going to do the same thing here with the IUL from Prudential. Prudential tends to be much more expensive. But so here's the index UL. So this is attached to the S&P 500. Not going to go through all the legal jargon, but as you can see here, withdrawals and loans, index credit amounts, this is your average. So this is what is attached to the S&P 500, your index credit enhancement, your market floor cap rate. See, this is shit they be like, you insurance guys don't know. Nah, the insurance guys know a whole lot more than your fucking investment guy. But your investment guy, shit sounds nice. Remember, I told you it's going to stay with the 1 year point to point, right? So your minimum cap rate is 3%. Your maximum is 9%, right? You get a bonus of a minimum of 0.25% monthly. You could get 6% biannually. You see here, you're getting 26% returns on the S&P 500 point to point. You can also allocate your money to the Russell 2000 or the MSCI EAFE. But most of the time, agents don't know what the fuck that is. So let's look here, because I'm talking about real infinite banking, right? If you really want to get down to it, you'll sit down with me, because I could show you this till you blow in the face. I could show another licensed agent this shit, and they won't know what the fuck they doing, right? Damn, niggas should have got with me before November, because this went down a whole percent. You used to get 6.7% monthly compound interest. Now you're getting 5.7%. But see, there's a bunch of columns here. Most people don't know what the fuck they looking at. Guaranteed policy values. What does that mean? That means everybody who had the Rona had it today and died. This ain't gonna happen. Everybody who had a policy with the company had the Rona and died today. That ain't gonna happen. Right? Let's look at this Prudential policy. I'm just giving you all a comparison. And I'm using Prudential because it's a big ass company. Because I got people who are smart asses who like to ask dumb shit. And again, you can see my info here. That's my phone number. Presented by Alonzo Hall. This is my Brooklyn address. That's the same phone number I done had for over a decade. 212-470-9932. Same shit you're going to see here. Right? Actually, let me decrease this so I can scroll up faster. Same shit you see here. Alonzo Hall, 212-470-9932. Because I actually does this shit. And I get tired of motherfuckers who don't do this shit, don't know what the fuck they talking about, charge niggas money for exclusive Facebook groups, charge niggas money for exclusive groups, charge niggas money for their fucking mastermind class. They don't know what the fuck they talking about. And then I get niggas who, I want to look at your little shit. Or I want to think about it. Well, while you thinking about it, just know the insurance and financial services company and the rich motherfuckers is thinking about getting rich off of y'all. So let's stop the game, man. You want to think about it? Either you all talk or you really about it. A lot of y'all motherfuckers is all talk. Right? Again, potential to build policy cash value based on the tax deferred basis. Fixed account options. The current declared rate is 4.25% with Prudential. S&P 500 index account option. Since the index interest is linked to the performance of the S&P 500 index, excluding dividends, the S&P 500 index account offers the potential for greater cash value growth than the fixed account option. The index interest is subject to a maximum credit rate of 7.75% with Prudential, but Prudential is a little more expensive. So let's take a look here at their policy values. And see, the reason I like this is because, see, they show you the IRR, which is internal rate of return. So when motherfuckers talk all that dumb shit, I'd be like, okay. See, I don't show you the IRR here, the internal rate of return, right? So this policy is basically $1,000 a month, $958.33 for Mr. C to have $1 million of life insurance. But again, that's with the death benefit of a level death benefit. See, I ain't even get deep into this shit. What's a level death benefit? That's a level death benefit, meaning all you're going to get is that $1 million. So let's look at non-alternative. So this section is what happens if the stock market crash. You're at 3% growth. This is what happens. Non-guaranteed is because we don't know what the fuck the stock market will do. But you're growing at a ceiling of 5.7%. Now, this is just your target premium. So this is so the policy won't fall apart, right? So this means that you're paying over the course of 10 years $115K, but after 10 years you've only got $89,000 to borrow against and $86,000 to withdraw. Now, that doesn't seem attractive until you understand about inflation. At a 3% rate of inflation, if you put $100,000 into the bank in 2020 and left it there until 2030, in 2030, that $100,000 now only has the spending power of $50,000. So even though people are talking that cash bullshit, you're still $36,000 of spending power the fuck ahead at a loss. But see, it sounds nice because these niggas get at your feeling. So what these niggas is doing is they're jerking your chain. Or for men, what they're doing is they're rubbing your dick until you get good and horny, and then they're telling you, hey, daddy, you got to cash at me to actually get the poom poom. Now, if you'll notice here, right, let's look at the 10-year rate of return on our Prudential policy. right? Notice something here. It says contract fund, right? Surrender value. Now, again, this is just built to build the policy. Now, your death benefit internal rate of return, your first year is 19,000%, right? But your internal rate of return is negative 100% for about the first 10 years of the policy, right? Now, as you go and you grow, this policy actually falls apart, right? So, same here. Brian, what's going on, brother? How are you? So, let's look at overfunding a policy, because that's really how you have to set it up. Now, again, I showed you a percentage of target, right? So that's the bullshit that these dumb fucks want you to just figure it is. So now, if I do, in terms of premium, have you pay the maximum that's a non-MEC. So that's the maximum that you can pay into a life insurance policy. That's $1 million face amount. The maximum that you can pay into the policy, right? In fact, let's do this. First, I'm going to show you minimum, because again, people like to be cheap motherfuckers and think you're paying for insurance with your money. Well, if you're paying for insurance with your money and you're not shopping for features and benefits, yes, that's when you buy a term policy. Now, again, nothing changed for Mr. C in this policy except for what he's paying into it, right? And I'm going to show you exactly how that differs, right? Remember, in this concept, I'm showing the minimum amount of premium you can pay. So the minimum that you can pay for that life insurance policy is $442 a month for that same $1 million policy, right? You see, nothing else has changed. Your age, your height, your weight, none of that shit changed. But again, you as the consumer have to be a little more educated and a little more diligent than just, how much does $1 million of life insurance cost? How much does a fucking Benz cost? As D. Durrell, I promise you, when he got that E-Class, he didn't go, oh, well, how come the E-Class? Because he said it. He said, yo, it's not an S-Class, right? He said it in his last video. Matter of fact, Chaotic, he was clowning on you, talking about his S-Class. Like I said, man, I keep it all the way 1,000. I don't give a fuck, right? But he was saying on that E-Class, it costs less than that S-Class. And there's reasons for that. So this same, I ain't changed shit. I ain't changed the death benefit. I ain't changed the death benefit option. I just changed the amount that you pay, because motherfuckers be like, well, I think I could get $1 million worth of coverage for cheaper. Yeah, the fuck you can. But you're going to get a policy that falls apart. First of all, you have no cash value in this policy until you're 44. While in this policy, you have cash value 3 years in when you're 40. Right? That's one big difference. And everything else is the same. It's still an indexed universal life insurance policy. Boom, boom. Right? So now, let's switch it up a little bit more. Remember, because we did percent of target, and now we did minimum. So now we're going to go maximum non-MEC. What is non-MEC? That means the maximum that it's not a modified endowment contract. If you were watching earlier, I told you about a MEC, a modified endowment contract. So let's preview this. Yeah. Damn, I got to go get my charger. I'll be right back. Yeah. Sorry about that, y'all. My laptop was dying and I didn't realize it. And last thing I want to do is go blank on y'all in the middle of spitting this ism and chism into your brisms. Yeah, that though. Alright, so again, this is for Mr. C. This is $1 million policy. Everything else is the same, except this time we're going to maximum non-MEC, right? Meaning the maximum that you can pay into the same $1 million policy, he could pay $1,422 a month. Or he could pay $442.94 a month. Or he could pay $958.33 a month. All are exactly the exact same fucking policy. The only difference is how it's being treated for cash value accumulation and how it's being used as his own bank. So let's look at that, because remember they told you it's going to be several years before you can cash out. Well, on this policy, he pays $17,000 a year into the premium. Into the policy. His first year, he's got $12,456 to borrow against. So basically, he paid $5,000 for that $1 million worth of coverage. Now, his second year, let's go to 10 years. 10 years, he's paid $170,000 into the policy. He has liquid to borrow against $160 and $158 to liquidate against. Again, when I tell you that, and you can Google this for yourself, because the rate of inflation is much higher than 3% today. But at a 3% inflation rate, how long would $100,000 last? Or what would $100,000 be in 10 years if I left it in the bank with a 3% inflation rate? Google it. Don't believe me? Google the shit. Right? Now, after 20 years, he put in $341,472, but he can cash out almost $500,000, $492K. Now, if we do the math, which we're about to do right now, 341,472 minus 492,002. So he paid negative $150,530. Very similar to savings minus debt, who always talks to you motherfuckers about stop being a debt slave. Look at the calculator. You can't fathom negative numbers. So can you fathom this negative number? You paid negative $150,000. That means that you've been paid $150,000 by the insurance company for making sure that when you die, not if, but when you die, your family gets $1 million. Now, come freak this a little more. Like I said, you can even fuck with it like Kareem Abdul-Jabbar, right? Mad motherfuckers go to Kareem to try and learn the skyhook, and many can't do it. So, let's look at the next step. So how can I make this even better? So I switch from premium option A to premium option B. Well, what's that? Well, that's an increasing death benefit. What does that mean? That means that for the same high amount of premium, you actually pay for much less life insurance coverage. What does that mean? Oh, well, what happened here? Oh, I have the specified face amount as $1 million. And that's why. Okay, now this one, you're paying $4,500 a month. Right? Same $1 million worth of death benefit, right? Or, like I was saying with buying a Benz, right? Same fucking logo. It's a Benz logo, right? But ask D. Durrell why he didn't get the C-Class. Why? Because the fucking E-Class has more features and benefits. And he got the AMG. Ask him why he got the AMG. Because the AMG is about performance. It's just like if you get a BMW and you get an M series. Or if you get a Dodge and you get the SRT. Or the Hellcat or the Scat Pack. Right? So, now let's look here. Right? All I did was change the death benefit from a regular death benefit to an increasing death benefit. Now that premium got a whole hell of a lot higher. You pay $53,000 for your first year. Well, who the fuck pays $53,000 for their first year? You've lost half your value if you cancel it the first year. But the first year, your cash value, first year is actually $47,000. So if we do math, 53997 minus 47844, you've actually paid $6,153 for the entire fucking year to make sure that when you die, your family gets $1 million. Right? So don't talk to me about the cost of life insurance and go jerking off the fucking Bitcoin and do this dumb shit talking about speculative investments when I just showed you how to get paid by the insurance company. Now, let's freak it a little more. Right? Because I showed y'all 10 years. So 10 years, he's paid $539,969 out of his pocket. Wait, But in 10 years, because these motherfuckers was talking about the infinite banking concept and it's going to take you forever. And even though fucking Warren Buffett told you motherfuckers the average investment strategy is 20 years. So when I hear all these niggas jerking off talking about, well, hold on for dear life, I'm going to invest and just let it sit there. My portfolio increased. I'm up 38,000. It's all bullshit, and it lets me know you don't know what the fuck you talking about with investment. Because if you're up, that's an unrealized capital gain. The only way you actually realize that is if somebody gives you that 58,000 for your suck a dick coin, for your bitches ain't shit coin. But see, now that I'm talking harsh, motherfuckers don't like this shit. And where we at? So I'm right here with it. So 10 years, you've paid out $53,969. This is another reason why it's so important to get insurance while you're young. I was actually on, what's the name? Game Changer. And he said some of the dumbest shit ever. Oh, it's retarded for me at a young age to want to plan for a family I don't have. And then a lot of these dudes in this manosphere space talking the dumbest shit about, well, 70% of marriages end in divorce. Nigga, 80% of businesses fail in the first 5 years. And you fuckers are all talking about go start an LLC, which is dumb as fuck anyway, because you don't have a business plan, you don't have a product, you don't have a service, but now you've got an LLC. Great. Well, the IRS sees your LLC as a fucking hobby after 5 years if you're not profitable. So, after 10 years, and excuse me for going in, but I can't help it, $539,969 is what you've paid out of pocket. However, you have cash account value, which is what you have accumulated or are able to borrow against, of $629,719, and cash surrender, meaning, you know what? Fuck it, I don't want the policy no more. I'm going to cash out, of $627,379. So again, let's do some math, because, that's one of the things that I do, and saving minus debt does too. 5, 3, 9, 9, 6, 9 minus 6, 2, 7, 3, 7, 9 equals $87,410. So that means over the course of 10 years, you're being paid $87,410 to make sure that when you die, your family gets at least $1 million. But remember, folks, this is an increasing death benefit. So, what does that mean? You see this here says net death benefit. Well, you're only paying for $1 million worth of coverage. But let's look at the 20-year time horizon, because again, you're holding on for dear life, and as many stupid motherfuckers don't seem to understand, Warren Buffett tells you your average investment horizon is 20 years with a 10% return. Don't believe me? Go get his books. Google the shit. Right? Your average investment strategy of wealthy investors is 20 years with a 10% average rate of return. But again, you bought $1 million worth of life insurance, because that's all you're paying for. You got $629,000 worth of cash value, so you got paid $87,000, and you kicked the bucket. Well, your family will get $1.6 million. Or let's say you say, you know what, fuck it, I want to take $500,000 out and do some shit. Okay. I mean, it's going to decrease the cash value and the death benefit because it'll be $500,000 less, but you still got at least that $1 million worth of coverage. Yes, you got to continue paying your premiums. But let's look 20 years. So 20 years, you've paid $1.079 million. You got almost $3 million worth of life insurance coverage, and you have almost $2 million of cash that's accumulated that you can borrow against, or you can say, fuck it, I want to cash out and take this cash. But see, motherfuckers don't look at life insurance as a wealth building tool, because the wealthy have told you, stupid motherfuckers, go invest. Even though you're not an accredited investor, so you're not actually investing. And it's not treated the same way when you get taxed on it. And now, due to the Build Back Better plan, your accretion where your little Shiba Inu went from worth 4 cents to worth 500 million bazillion dollars, even though nobody but Elon Musk can afford to buy one whole coin from you. And that's the problem. You motherfuckers is buying bits of Bitcoin. It's not like you own one entire coin that's worth $58,000. The only motherfuckers who got that are Elon Musk. So when your shit is, well, oh shit, my Shiba Inu, I told y'all to get in. You're basically participating in an active fucking Ponzi scheme. You're just looking for the next retarded motherfucker to come behind you and be like, Shiba Inu's gonna go up. Let me get on it now, because I didn't get on it when it was 4 cents, but I'm gonna buy it from you now that it's 28 cents. You made your little bit of coins, which is a couple $100 fucking dollars. Ain't nobody making thousands and millions off of it. But it is what it is. At any rate, damn, I've been going for a minute. I was planning on going for like 10 minutes. So I done went for an hour and a half. But this shit right here, yo, you got $2 million to cash out. It's an investment, bro. I'm looking at this. Investors favor annuities. Oh, damn, what's an annuity? Is that a life insurance product? Well, it just so happens to be. Let's take a look at fixed and indexed annuities. So let's look at the 30-year mark where this motherfucker is now 67, right? And he's got 1.64 million. Oh, wait, this is the wrong policy. Let's look at this one where he's overfunding it, right? And now he's got, $3.8 million to put in this fucking annuity, right? Internal premium, external premium. Oh, this is a SPIA. We don't want to do a SPIA. We want to do a deferred. I had changed that state. New York doesn't have the indexed annuities. 0. Let's just do 1 million. So he's going to put in $1 million, right? And this is deferred. Let's say, you can't get life insurance, but you want life insurance protection. So let's say he puts $1 million one time away in an annuity, which is a fucking IRA, by the way, just in case you didn't know. And we still here, yes. So, Compass FPDA, flexible premium deferred annuity, aka a fucking IRA. Right? Oh, and in case you didn't know, right? Because as you'll see here, you see non-qualified, qualified. I had to change the state so you can see some of that different stuff. Because in the state of New York, they don't. We'll just do North Carolina. In the state of New York, they don't have an indexed annuity. Why did it go back to New York? North Carolina. That's fine. Yeah. I know that shit's not available for that state. Okay, let's do this. But anyway, so your initial premium 0. He drops in a lump sum of $1 million. Now, if you'll notice, it's growing at 1%, right? Because that's what IRAs grow at. Now, the guaranteed minimum value doesn't matter at these points because you're in your accumulation phase. So basically, he put in $1 million, but if he starts to cash out, there's penalties. Number one, you can't cash out on an annuity or an IRA until 59 and a half. So you're looking at your retirement age, and he put $1 million away at 37. And by the time he's 60, it'll have earned $100,000 for him. And then it'll actually start paying out X amount of dollars a month. This will pay him $4,500 a month every month until the day he dies. And that's assuming that he's only going to live 20 years after the age of 65. Right? Let me just change this here real quick. I know we got the SPIA in other states, right? Now, a SPIA is a single premium immediate annuity. I don't think anybody's really old enough for that, but an immediate annuity is basically you put the money away and inside of 12 months, it starts paying you. They do have the indexed annuity here. So let's take a look, because you can roll over money from a qualified plan, right? So you can roll over from a traditional IRA, an SEP IRA, a simple IRA, or a Roth IRA into another annuity, which is an IRA, right? But you can actually roll those into this, right? This is the software. This ain't some shit I created, right? If I could create this, I'd definitely have created it for motherfuckers and be a bazillionaire. I wouldn't be on YouTube, obviously, right? But so that's just an illustration for an annuity, right? Which again, from Think Advisor, investors favor annuities. Well, maybe there's something on to this shit I've been talking for these years. At any rate, ladies and gentlemen, I'm hungry, so I'm about to get the fuck up on for this online. Plus, I like to be in the clouds watching a lot of other folks. I'm going to put in-depth stuff, training and all that good stuff into my Patreon. It's going to be behind a paywall, but that's where you're going to get the good game. If you think you got game here, you taking notes here, wait till you go into my Patreon. With that being said, ladies and gentlemen, wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. Now, ladies and gentlemen, before I get out of here, hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, you can contribute to channel growth by supporting. You can schedule a one-on-one appointment with a licensed financial professional, or you can purchase life insurance directly up to $1 million with an instant decision and no medical exam. The links are in the description. With that being said, ladies and gentlemen, remember, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.